not financial professionals, and this podcast is designed for entertainment purposes only. We are regular folks who do research and present opinions to an audience in a fun way. Our opinions should not be construed with the views of any organizations we may be affiliated with. This podcast does not represent the thoughts, intentions, plans, strategies of our employers. It only represents the opinions of the authors. If you need specific guidance on your own financial situation, please consult a financial fiduciary professional. If you haven't heard about Anchor, it's the easiest way to make a podcast. Let me explain. It's free. There's creation tools that allow you to record and edit your podcast right from your phone or computer. Anchor will distribute your podcast for you so it can be heard on Spotify, Apple Podcasts, and many more. You can make money from your podcast with no minimum listenership. It's everything you need to make a podcast in one place. Download the free Anchor app or go to anchor.fm to get started. That's anchor.fm to get started.
Jerry, how you doing? Happy Sunday.
Hey, Greg, how are you? Happy Sunday.
Well, welcome everybody. This is our second Money Vikings podcast. This is like I can't believe we even did one.
Yeah, I know.
Do you have any Viking metaphors to launch during this one? Like we're suited up in our Viking armor with our Viking shields, ready to take on this wild market.
Yeah, let's go with that one.
Okay. That was totally out of the blue. Just came up with it. So.
Thank you, because I did not have one, so I'll use that.
Yeah, for those of you wondering, we don't sit here with helmets on and stuff. But it is kind of a good metaphor when you think about it for when you're trying to build wealth and deal with the market and deal with your own personal budget, right? You got to kind of be a warrior.
You do.
I mean, there's a lot of forces out there. Speaking of forces, can I do a little cheerleading moment for America?
Sure.
Will you indulge me? Okay.
Yeah.
So speaking of forces, COVID-19 is a pandemic is a popular one. So I guess I just wanted to say that we can do this, America, and I mean that because it sounds crazy. But, I am keeping up on this thing, right? And the scientists, Jerry and I do a lot of investing, and we look at pharmaceutical companies, and we're looking at, all the virus companies or the vaccine companies. And they are working day and night on therapies, and they're getting data, and we're using artificial intelligence, and we're using all these new tools that humanity has to tackle this humongous problem. But in the meantime, we just have to wear masks and social distance so we can give the scientists some time. So I just want to say we can do this. Be safe out there, everybody. Our economy, our country, our health depends on it. And we're going to be fine. We're going to be fine. Do you feel that way, Jerry?
Yeah, no, I do. I think we just do need some time. It's a little bit concerning because nobody knows how much time we need. That's probably the scariest part, but no, generally I think that we all need to wear masks and social distance, and hopefully this thing will emerge stronger in the end.
That's what I'm thinking. Yeah. And that's part of what we're going to talk about today. We're going to talk about some of the things that we thought were changing from a investment perspective and have changed. But I guess we'll start out with how was your week?
My week was pretty good. Yeah, I did a lot of trading. I was on vacation, so I had a little more time to follow the market, some of the details, and overall I ended up profitable. Hopefully it continues that way. But yeah, I did a lot of earnings trades, which are one of my favorite trades. And then next week I plan on doing more of the same.
That's awesome. Yeah. And so as I mentioned during the last show, Jerry does a lot of options trades. And again, the big, you can speak better to this than I can, but the big benefit of that is that you don't just have to make money during an up market or when a stock's going up. You can decide if it's going to be neutral. You can decide if it might go down or go up. And you can buy insurance that way. And you can play the market different ways to make money. I don't know if that's a good description or not, but that's.
It is. I mean, the way that I've thought about it and heard about it described is you have to come up with an assumption before you make any trade. And you have a bullish assumption, a bearish assumption, or a neutral assumption. And, even if you don't have an assumption, you can pick one and take your, make your bet. But the thing I like about these earnings trades is that I'm generally neutral on them, as I was saying last week. And I know within a 65 to 80% probability, I usually like to take trades that are 80% probability and higher. But those are not always, those aren't always the most lucrative trades because of the high probability. But anyways, ahead of the trade, I'll know what the probability of success is, or the probability of making 50% of my target profit. And so, when Twitter reported this week, I didn't care if it went up or down, as long as it stayed within the standard deviation, if you will. The one standard deviation is generally what I'm looking at. Intel broke that and went way lower than anyone thought after they reported earnings last week.
I saw that.
And now I'm either, my put is much lower than the current stock price by about $5. So I'll either have to decide by this Friday, do I roll that put forward from August to September, or do I hang on to it until the end in hopes that Intel bounces back up? Maybe a lot of people want to pick it up now that it's cheap. Or do I let it get assigned and I take ownership of it for below market price, but maybe it becomes a long-term buy and hold. So options give you options, as they say.
Options give you options. I love it.
So,
but you hit on something that always really resonated with me in terms of the options, and that was when you would describe how a lot of it's about the probabilities, and you choose to do the ones with a higher probability of success and a little less reward, as you said. Correct. But a reward nonetheless. And probability is a key thing, because I think we can all relate to that in our lives, because every day we make, whether we're conscious of it or not, we're making decisions based on people, when they now, it's a little more complicated in the era of COVID, but probabilities are even more applicable. But, when you get on a plane, it's generally a very safe way to travel, because you would think probabilities, 1 out of, 5 million flights, have a problem, right? Mm-hmm. So you have a very good probability of safely arriving at your destination. And so that always resonated with me, because I'm a big, I love that whole concept of probabilities and thinking about the chances of this or the risk of that, right?
The one that's been on my mind a lot this week, it's kind of silly, but I have to say this, the walking down the street, do you ever play sidewalk chicken with someone? Like, who's gonna get off the side?
You're talking specifically in the era of COVID.
In the era of COVID,
yeah,
you're walking towards someone, and you see who's gonna walk onto the street first. Is it going to be you or the other dude coming at you?
Right.
You get closer and closer. I usually take the high road, or the
and move out of the way for them.
And move out of the way. But then the probability comes into my head, and I start thinking, is it higher probability I'm going to get hit by a car? Or higher probability I will catch a whiff of the person walking past me's potential COVID infection, if they have it? What's the probability of that? And then if they have it and then they give it to me, just by me, walking past them on the sidewalk versus getting hit by a car. I mean, what do you think is higher probability?
Oh, I know the higher probability. It's getting hit by a car.
That's higher probability, you think?
I absolutely believe that from everything I've read, because you're not going to get, the COVID spike. A lot of it is about, the bars filled up and people are in these enclosed spaces for a long time. It's these enclosed environments where people are talking a lot, right, and spraying our microscopic droplets all over the place.
Yeah.
That's where it's getting spread around, and then from there it's being taken back home, to people's homes. So yeah, walking down the street and walking by somebody, I guess it's not zero, but from what I've read, I'm not a scientist, I'm not a doctor, so I got to do a little asterisk right now, people. So don't take what I'm saying as Dr. Greg. I'm not a doctor, but from what I've read, you'd have a chance of getting hit by the car, I think. Yeah.
Yeah, that's what we do every day. We walk on the street,
Not to go off on too much of a tangent, but actually I have a similar story for you that's very strange. I went to pick up, and it has to do with probability of getting by car. I went to pick up some tacos this weekend at one of our favorite taco shops nearby. And this is a crazy story. I was waiting outside, of course, with my mask on because I didn't want to be near sort of the front of the establishment. And they were going to bring the bag of tacos out to me and hand it to me because I was doing the social distancing. I was out on the sidewalk area. There's this gentleman that walked up with a big dog, actually a pit bull, big dog. He's going into the store next door. He ties his dog to a metal chair and walks into the store. The dog flips out like when the owner leaves, and the dog runs forward, dragging a huge metal. Yeah, seriously, the dog starts running at me with a huge metal chair tied to it, and it was freaking out. And it was one of those moments where it was like slow motion in my mind, and I'm like, what do I do? I'm usually pretty good with dogs, like I can kind of, but I was like, this one has a metal chair tied to it. And I literally jumped into the road. And one of my calculations was, is it better to deal with this dog or kind of avoid a car? So we both had, is this a show about investing or I don't know.
Well, it's all related. It's
probability.
That's right. That's why I love options. I mean, it's all about the probability. When you buy a stock, it's 50-50. You think when you buy a stock, you expect it to go up, but there's only a 50% chance of that.
Yeah, you're right.
And you have so many more options with options.
And for our audience members that don't do the options, that's a good segue, Jer, if you don't mind. I've been reading a lot this week about, options is more of an active approach, right, to investing and trading, as we know. I was reading about the opposite this week, and did some interesting research and was reading about 3 fund portfolios. And this is basically a very simple approach for people that don't want to do the options thing. And they basically want to pick, 3 mutual funds or 3 exchange traded funds and just basically dollar cost average, which means put a set amount into them, every 2 weeks or every month, and just basically let it ride for, until they retire, let it ride for 30 years. And so, I don't know, I was kind of checking that out this week. And I mean, you and I, to be fair to the audience, we kind of do both, right?
Yeah.
I mean, you don't options trade with all your money. You do that with some of it. But I mean, with most of my investments, I probably do like a 3 or 4 fund approach.
Mm-hmm. Yeah, there's something nice and simple, and you don't have to worry. It's very passive. Hopefully it appreciates and gives you dividends and income. But what 3 funds were you thinking would be good for most people?
Well, that's a good question. I was thinking about that. And one of the main things I was thinking about, back to the whole, what happened with the COVID and the economy lately, is that you really do need to be diversified, right, into different sectors. And we talk about this, I mean, think about if you had a portfolio that was like really heavy into real estate, commercial real estate, let's say, that's not looking too good right now.
No, I was in Realty Income, right? Is that what it's called?
Yeah.
And for a while I was doing cash secured puts on those over and over and over again. But right, and I did another strangle on Simon Property Group, and I just got a little nervous and thought maybe I don't want to be so into real estate right now. But that's just me. Maybe I'll change my mind. I was going fairly neutral on both, but I'm afraid it's going down, and so maybe that's the way to play it, but I'm not sure.
And I hear you. And sometimes people say, I've seen talk right now on some of the different investment things we read. And, some folks are saying this is the time to load up, right? This is when everybody's scared. So this is the time to buy some store and buy some because everybody's freaked out right now.
Very well could be.
Right. Yeah. And this
do the opposite of what I do. Maybe you'll be rich.
I don't know. Some people would be wise to listen to you, but that is a strategy some people do where it's like the Warren Buffett thing, right? He says, be fearful when everyone is greedy and be greedy when everyone's fearful. So right now, everybody's very fearful of certain real estate REITs, right? So maybe it's the time to load up. And, I've never done a great job at that with like any individual stocks. I would definitely say that, we've probably done a good job of that. Like in terms of, after the Great Recession, you and I kept dollar cost averaging, right, into different funds. And that in a way was continuing to buy the market at discount.
Yes.
So that's pretty cool. But I don't know what else, did you learn anything else this week that you wanted to mention or?
Well, on your fun things, in our notes that we pass back and forth before the show that mainly you write and I read, you did have one fund there that I am dollar cost averaging in. Actually, it's I love this fund because it's got the word "dad" in it. It's a VDADX, Vanguard Dividend Appreciation Fund. Is that it?
That is it, man. The VDADX. Yes.
So I have a health savings account through work, and they let you put money in it every 2 weeks because I get paid. So I moved a bunch in a few weeks ago, and I will continue to do so. And that's in my HSA. So if I need the money, I can quickly sell and move it back into the deposit account or the checking, the HSA. But that's nice because that appreciates all tax free.
So are you saying you put that into VDADX?
Yeah.
Oh, that's crazy. Wow.
Yeah.
That one, to me, that one, it's like, so when I you probably do this, but like when I research different funds, I'm always looking at the largest holdings, right? That's a normal thing to do. And so, that one in particular, and by the way, audience, we're not getting money from Vanguard for this. So just so everybody knows. But that one's got Microsoft, it's got Walmart, it's got Johnson & Johnson, it's got Procter & Gamble, United Health, Home Depot. Look at these companies. Those companies have rocked out.
No, definitely. And I believe this one is interesting because the manager of the fund looks for companies that not only pay dividends, but are sort of in a position to grow over time, the dividends that they do pay. So that's kind of neat.
That is cool. Yeah. So, there's ways, I think it goes to just show you there's ways. And I think that's so people know. That's like a lot of why, Jerry and I do this podcast and the blog. It's really about, it's about learning and demystifying investing. Because I think in America, we just, in the US, there's just very little financial education that people get. And then in addition to that, I think there's a lot of confusion out there. And, I'm not a conspiracy theorist, so I don't know if it's confusion by design, like make it confusing so that you have to pay people a lot of money to figure it out for you. But, there's just a lot of confusing information. And so we like to find ways to simplify investing and growing wealth. And I think there's a way to do that. I do think people have to be continually educating themselves, but that's true with life, right? Unless you're continually educating and learning and reading, we're kind of then stagnating because the world is dynamic. So
it is. Yeah.
All right. So look at me, like so philosophical.
The other thing I'm learning this week is to be a little in I've been doing futures a lot more. And I've been exploring the small exchange launched on June 1st. And so I've been enjoying playing in that because the leverage is really good and the risk is very small. Everything moves, a penny is $1. So and you get a lot of leverage. I think it's $115 to control, maybe no for the small exchange 75, you get $500 of margin that you will let you trade $4,000 or $5,000 notional value of futures. So that's pretty cool. If you were going to try and do that in SPY, it would be $30,000 or something.
We should do a whole show on futures. That's fascinating. I've never even looked at it. So
yeah,
that'd be interesting.
Tastyworks has a lot of interesting products, and they're adding more all the time. But I did the small 75, and I've kind of learned to stay in it a little longer and not jump in and out after a few bucks of profit. I get excited and I just take profit, or I'll get really freaked out and see like minus $20. So now I'm kind of trying to be a little more even keeled and just stay in the trade a little longer. Obviously, I have my mental stops in place, but I'm trying. I actually stayed in the entire weekend in the small exchange 75, which is interesting. So we'll see how it opens tomorrow. These aren't 24/6 futures; they're 5 days a week, and they trade during the trading day,
I think
like stocks.
This is an awesome example because it just shows how you kind of do these different things to learn, and you can just sort of dip your toe in the water, right? Kind of start figuring it out. And that's how you started. I remember a couple of years ago with the options,
Right.
The time really flies with these shows because I'm now seeing that we're about out of time.
We are. It sure went by fast. I hope our listeners enjoyed it.
I hope so. I just want to put a little plug out there.
All 8 of them.
Oh, yes. 8 of them. That's right. Thank you. I love them all. Thank you. That's right. No, I did want to ask people to join us next time because we're going to talk about something that we call the investing trifecta, and that's how we tripled our net worth in a couple of years. So that'll be interesting, among other topics, and just listening to our soothing voices. That has its own value. I would say. Sure does, right? Especially Jerry.
Put you right to sleep.
Put you right to sleep. So if you're having a hard time sleeping, turn on our show.
Put it on repeat.
Yeah, exactly. So, can I lead us out with a quote that I read this week that I thought was kind of cool?
Yeah, please.
Okay, I've been reading a lot of like Stoic philosophy type stuff, and the basic concept there is during times of like pandemics and other crazy things in life to try to not be ruled by your emotions, but try to kind of take things one step at a time, take a step back, right? Kind of like help you manage hard times. And this one I came across this week. I thought it was kind of cool, but it said, you must stop blaming, you must control your desire, and you must no longer feel anger, resentment, envy, or regret. So I think if we can get less anger and less resentment and less envy and less regret in the world, I think it'll be a better place for all of us.
I think so. That's beautiful, man.
So, hey, it's always nice talking with you, Jerry.
You too.
Hey, we'll talk soon.
Okay. Bye-bye.
Thanks.